Yo, welcome back. Today we're talking about the biggest comeback kid story of 2026, Tilray Brands. I've called this the Trump rescheduling countdown because, honestly, the stars have finally aligned. For the first time in 50 years, federal policy and corporate hustle are actually on the same page. Is Tilray a moonshot? Maybe. But they've built a machine that's ready to print money once the government gets out of the way. Let's look at why 2026 is the year the flip finally switches. First up, the big boom moment. On December 18, 2025, President Trump signed Executive Order 14,370. This wasn't just some boring paper. It was a direct order to the DOJ and DEA to hurry up and move cannabis from Schedule 1 to Schedule 3. Look, Schedule 1 is where they keep heroin, the stuff with no medical value. Schedule 3 is for legit medicine. This is the biggest drug policy shift in 50 years. It's like the federal government finally admitted the earth isn't flat. It changes everything for Tilray's legal path in the U.S. So why is Tilray ready for a rebirth? Simple. They've been beaten down so hard that the only way left is up. They're trading at a historical floor, basically at a garage sale price. But here's the kicker. Once Schedule 3 hits, the compliance handcuffs come off. Big money hedge funds that weren't allowed to touch Schedule 1 stocks are now clearing their desks to buy in. We're moving from hoping for a miracle to watching a plan come together. The institutional big boys are coming, and Tilray is their favorite liquid play. Now let's talk about the tax trap. Section 280E is the monster under the bed for cannabis companies. Right now, because of Schedule 1, Tilray can't deduct normal business stuff like rent, marketing, or even the coffee in the break room from their taxes. They get taxed on their gross profit, which means their effective tax rate is a soul-crushing 70% or more. It's like trying to run a race with a backpack full of bricks. But under Schedule 3, that monster dies. When 280E dies, Tilray flips from red to green almost overnight. Their tax rate drops from that crazy 70% down to a standard 21% corporate rate. This isn't just an accounting trick. It's like Tilray suddenly finding a huge pile of cash under their mattress. We're talking about millions in free cash flow being liberated. No new shares, no dilution, just straight-up profit. The market is pricing them like they're still carrying those bricks, but the bricks are about to vanish. And don't forget the sales surge. Schedule 3 basically says, hey, this is a real prescription drug. That opens doors that were locked shut for decades. In April 2026, the Medicare CBD pilot program kicks off. This is the first real test of Uncle Sam actually paying for cannabinoid therapies. Tilray is already the king of medical cannabis in Europe, so they've already done the homework. They're going to take that German precision and apply it to the U.S. market, while everyone else is still trying to figure out the paperwork. But here's the secret. Tilray is way more than just a weed company. They've spent the last few years building a massive, diversified empire. Only about 31% of their revenue actually comes from cannabis. The rest, 39%, is pharma distribution, 23% is drinks, and 7% is wellness. This is their moat. If the cannabis market gets weird, they've still got beer and medicine to pay the bills. Most of their competitors are one-trick ponies, but Tilray is the whole circus. Their distribution biz, CC Pharma in Germany, is an absolute cash cow. They hit a record $85 million in revenue just last quarter. Sure, distribution is a lower margin game, but it's steady. It's their survival capital. While other cannabis companies are out there begging for loans at 15% interest, Tilray is using its pharma cash to fund its own growth. It's like having a rich uncle who pays for your college while you build your startup. And check this out. Tilray is now the fifth largest craft brewer in the U.S. Brands like Shock Top and Sweetwater aren't just for drinking, they're for distribution. They already have a presence in all 50 states and massive relationships with grocery stores and bars. They're building the pipes of the industry right now. By the time the U.S. is fully legal, Tilray won't be looking for shelf space. They'll already own the shelf. This is where the synergy kicks in. Think about it. Tilray has 13,000 pharmacy relationships in Europe. As the world moves toward medical cannabis, they just plug their product into that existing pipeline. No extra cost, just pure scale. They aren't building a medical business from scratch. They're scaling a world-class pharma machine. It's like they've already got the highway built, and now they're just putting faster cars on it. Then there's the 100,000 Touchpoint's advantage. Through their beer network, they're already in 100,000 bars and stores across America. Now, watch this move. The 2026 Farm Bill is about to crush the gray market hemp THC drinks this November. When those sketchy products disappear, Tilray will be the only legit player ready to fill those shelves with regulated, Schedule III ready drinks. They own the last mile. While growers are stuck at the farm, Tilray is already at the checkout counter. And let's look at the bank account. Tilray is sitting on nearly $292 million in cash. For the first time, they are in a net cash position, meaning they have more cash than debt. This is their secret weapon for M&A while their competitors are drowning in debt. Tilray is out there, strategic ready. They're basically the only ones with a full wallet at a clearance sale, ready to buy up undervalued U.S. companies the moment the federal light turns green. To wrap it up, 2026 is a perfect storm for Tilray. You've got the Schedule III mandate from the top, the 280 tax repeal fixing the math, the steady cash from pharma and beer, and that massive 100,000 store distribution edge. Tilray is moving from a speculative pot stock to a diversified global leader. The countdown has started, and honestly, the market is still sleeping on just how big this machine has become. Now I've got to be real with you, there are risks. The government can be slow, and the DEA might try to slow walk the final rules. We might see some legal drama from groups that still think it's 1950. Plus, the FDA still needs to figure out the rules for drinks and edibles. Expect some bumps in the road and some headline noise, but don't lose sight of the fact that the macro direction is locked in. It's going to be a wild ride, but the destination looks pretty sweet. Last thing, the legal stuff. This video is for education and entertainment, not financial advice. I'm not your broker. Cannabis stocks are crazy volatile, so do your own homework. Also, full disclosure, I might have some skin in the game with positions in TLRY. Talk to a real pro before you drop your life savings into anything. Thanks for hanging out. If you liked this breakdown, smash that like button and subscribe. Catch you in the next one.